Hey guys, welcome to this trading course. It's your boy Sammy. In today's video, I'm going to be sharing with you market reversal chart patterns. If you have been a trader and you're being caught on the wrong side of the move, whereby you buy and the market actually sells, that's the reason why you should watch this video and stick with it to the end. It's because the market is not the fault, you are the fault. You're not able to pinpoint that the market changed reversal. Now, ability for you, one of the help of this video in your trading career, it's going to be showing you how and when to exit a trade, knowing that the market is about doing something different from what you were actually analyzed. Now, one of the things that every beginner trader needs to be aware of is we do our analysis based on what the market has done. Now, I struggled with this a lot of times. I struggled with it a couple of a year because I never understood what I was what this concept was. I was like, I come to the market and I think this is going to happen, and immediately I am done with my thinking, the market does something else. It happens a lot of times, and beginners are suffering because of this what inability to understand that the market make the decision, why you the market make the analysis out, why you make the decision to either enter or not. But you have to stick with what the market has done. It is what the market has done that you analyze with. Now, one of the things the market do is it does chart patterns. And that chart patterns is to tell traders that, hey guys, we are about to reverse from a sell to a buy, or we're about to reverse from a buy to a sell. Now you have to understand what this chart patterns is, else you're going to be caught on the wrong side. So if you're still with me in this video, I'm going to be diving with you and telling you what you need to know about reversal patterns. Okay, now we're going to be talking about the bullish first. Now, what are bullish reversal patterns? Bullish reversal patterns are patterns that tells you that the market was actually bearish. Let's start from here. As you can see, we have a double top. Yeah, now what can we see here? The market was actually what bearish. So the market moved up and got to this zone here. It got rejected, came back down. Now from this zone here, what we can see is that the market went back up again. Now we see a double resistance here. The market did not break above it. But now take your eyes down. There's something here. It's called the neckline. Yeah, it's called the neckline. Now I'm going to be showing you what this neckline is. Okay, now stick with me in this video. Now after the market does the resistance here, what you're going to be seeing is that the market will come what down to the downside. Now take note of this. What has happened here is a double top. A double top has actually been formed. And what does the double top mean? Double top actually mean a market reversal pattern, chart pattern. Now whenever you see this happen in the market, okay, what you should be doing is wait for what confirmation before you get your what entry. Now take note of this. We got a resistance here, another resistance, first top, second top. It has been confirmed. Then we got a break. Now for beginners traders, two things are bound to happen. One, you can wait for the market to come down and give you a confirmation here to this neckline. Don't forget I said neckline. I'm going to be showing you how you should enter. The market will give you an opportunity for you to enter here and right price to the what? To the downside. Now, why am I saying so? The market, with this coming back, this pulling back for the market to pull back here and give you a confirmation to the downside, it's actually what they call what? Retracement move. A pullback to what? Come back to give you a confirmation that after seeing this double top, you have to what? Enter. Now there's another entry that is here. I'm not going to be explaining entries now, but I want to talk about chart patterns. But if you stick with me to the end of this video, I'm going to be showing you what entries are and possible entries. Now let me tell you, one of the advantage of this video is a covered course. One of the advantage of this video is a covered course is that I'm going to be showing you how to draw a trend line to actually confirm that double top you have seen, because every market actually does not just move like that. It has, when it is moving, it is drawing a trend line, and you have, as a trader, you have to be able to see that trend line, and seeing that trend line is going to make you get what understanding of what the market is doing. So that time you'll not be panic. You'll be like, let me just wait, I just have to wait to confirm this stuff before what getting in. So what you have to do is what, stick with me to the end. The second one, I'm going to be showing you possible entries. There are three entries the market give in every what opportunity in the market to trade. three entries. I'm going to be naming them, and in the video just stick with me to the end. Okay, so let's move to the next one. This is the first chart pattern. The next one is triple top. Now let's confirm this. This market was actually bullish. It went up, gave us the first resistance, came back down, went back up, another resistance, it came back down and went back up again. Now we got the three confirmation, and then we got a break. Don't forget, this is our neckline. What did I call it? Necklin. Don't forget the stuff I'm doing. This neckline. Okay, this stuff here is neckline. Every market does it. Every market does it. And whenever there's a break in that neckline, we're expecting a possible retracement move. Like you can see here, get an entry here to right price to the downside. So this is what happens most of the times. So this is another chart patterns. Sorry, I think I made a mistake. So this is a reversal chart patterns for bullish to a bearish market condition. If the market is bullish and it wants to reverse, it turns from a bullish resistance, it gives you three resistance, and it will turn towards a bearish market condition. Now let's move on. I've talked about double top. Now let's talk about this one here. Now we have something called head and shoulder. Now I'm dedicating this video also to my mentors, mentees in my trading academy, trading with Sammy. In case you want to join our academy, it's always open, so you can just leave a comment in that section below, so we'll just give what attention to it. Now another thing you need to be aware of, this is called a head and a shoulder pattern. This is the left side of the shoulder, this is the right side of the shoulder. Now when the shoulder pattern is being formed, it does something like this. It went up, comes back down, and goes back. This is the head, and this is the highest. It comes, pulls back down. Most of the times it breaks structure here, BOS, break of structure. Now possibly happening here, and there's a retracement. Now this is where you get the entry to what right price to the downside. Don't forget, like I said, this is the bullish market reversal that has to do with what price giving you a chart pattern on how to change your movement, understanding that we have been bullish before and we want to turn bearish. This market gives you that understanding. Okay, so now let's move on. Now talk about the bearish uh bullish reversal pattern. I think I'm mistaking these two stuff. This stuff is actually a bearish reversal pattern, and the other one I'm going to be showing you here is bullish reversal pattern. Now let's talk about this one. As you can see here, this market was actually what, let me bring this camera down so we can just see this clearly. Okay, let's take it this way. Okay, as you can see here, this stuff is actually what is actually it was bearish here, but we can see the trend line. This was confirmed. This was the left side of it. This also. Now remember what I was saying. I'm going to be explaining this. Okay, stick with me to the end of the video. So like I said, this is it. Single, double, bottom, single, double, bottom. Then what happened? We got a trend line break. Now for my traders, I've been asking me question about this stuff. Sammy, how do I get to understand this? Now let me show you a secret. Now whenever you want to draw a trend line, you should make sure the trend line is touching two major swing points. It's very important. Because why? The market, like I said earlier in this video, the market does not just move like that. When it's moving, it's actually respecting trend lines. And I can say gracefully, trend line is one of my secrets in trading, because it gives me a lot of understanding. To understand what the market is doing with what trend line, it's easier for me to pinpoint. I don't need many indicators. I'm cool with trend line. So as you can see here, we got a break here, and the market came back to this trend line, and we started going up. We started going backward up. So this is also a chart pattern for a reversal. It's from a bearish market condition to a bullish market condition. Now the next one is this. Let's talk about the triple bottom. Now this is a triple bottom. The market was actually bearish. It was bearish. We have one confirmation. Don't mind what I just drew here, is not correct. Let me take this out so we don't mistake this. It's supposed to be something like this. But this stuff is not straight. I'll show you on the chart. Let's stick with me. I'll show you. We'll go back to the chart and I'll show you Now this stuff here was the first leg, second, and third. Now a lot of folks like to enter their market here. I'm not going to be mentioning what it is, but I will show you in the chart what this means. A lot of folks like to enter their entries here, yeah. They like to enter the entries here after this third one has been confirmed. But how do you know that this is the right one to enter? That's a big question. Some folks mistake this for double leg. You wouldn't know that if the market will be going up back again. So you want to enter here. If you enter here now, you'd have got stop. Probably you put your stop loss here, so you get stopped out. So I'm going to be showing you also that aside. Now another one is this. We have this. Okay, now this is head and a shoulder pattern. That's the left side of the head. This is the head of the shoulder, and this is the right side of the shoulder. Now as you can see, we have confirmation of major swing points, one, two, and this also. I will consider this also. Then we got a major spike out of the break. Now let beginners traders listen to this. Okay, listen to this. Let me take this out first. Let me take this out. Listen to this. Okay, it's very important. If there is a break, you don't just enter the chart here. You don't just enter the chart here. Nah, don't do that, because you will get stopped out. The market will hunt your SL. Have you ever been haunted before, whereby you place a stop loss? Let's say you place a stop loss here and the market comes after it. You place a stop loss, the market keeps coming after it like that. But I'll keep saying this, okay? I'll keep saying it. This is the wrong place for you to enter. I made that mistake a lot of times. And I almost blame my village people. Like, they were after me. Like, I placed a stop loss and they're like, the market is actually, anytime I adjust the stop loss, coming after my SL. What's going on? Hey, what's happening here? The fault was from me, okay? And now let me quickly say this for those that are new into trading. If you really want to last in this game, let me tell you a secret. That secret is, please always blame yourself whenever something goes wrong in the market. Now, why am I saying blame yourself? You'll be like, why would I want to carry the blame? Normally, humans don't like being blamed for anything, okay? But if you come to the forex market, you have to be humble enough to blame yourself. Now, why am I saying blame yourself? Now, I'll tell you a secret. If you blame yourself, you can be able to adjust. But if you blame the market, you cannot change the market. You are not the owner of the market. You are just opportune to be a trader. So your own is to keep blaming yourself and keep seeing how you can improve on yourself. Like whenever something goes wrong, your essay was hit, your target was not hit, or whatever something goes wrong, check where the problem is. And I believe you, believe me, you'll be able to what fix it. And once you're able to fix it, let me tell you, you are growing. You are actually going a step higher than where you were before. But when you blame the market, you come today and you blame the market, and the market like it's not moving my forward. This is not for me. This is that. Or you keep complaining, you will not be able to what succeed, because after some time you get frustrated. Now there's something you're doing to yourself. You're trying to make yourself feel comfortable, trying to tell yourself that your market is the fault, it's not you. You're trying to make yourself feel comfortable and trying to tell yourself that, hey, I think the market is the problem, it's not me. You will not succeed that way, okay? Now let's continue. Like I said, whenever the market breaks this zone here, it comes back to confirm it. So you should be waiting for it to come back to this what trend line. Sorry, come back to this trend line. Now another place I like putting my SL is here. Yeah, you know why? I know the market should be any case the market comes to this zone here and stop me out. It means that the structure and the what's it called, the whole stuff that I made was a mistake. I will have to go back to recheck what I did. Okay, so now let's like dive right into the chart and let me show you how you are going to be looking for ways to enter the market, the three entries, and what to predict before what looking for an opportunity in the market. So are you ready? Let's get there.